Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is November 13th, 2015. It is 9:01 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. Let's go to the disclaimer before we continue. Disclaimer. Futures, stocks, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let us begin. So let's go to the calendar real quickly and see what news just came out, because it was quite a bit. So let's start from the beginning. We had the euro came in as expected for GDP for the French. GDP for the Germans came in as expected. Non-farm payrolls for the French came in as expected. Producer price index came in as expected, better than expected actually. Italian GDP came in worse than expected. Construction output for the UK came out worse. Flash GDP for the euro quarter on quarter came out worse than expected. Trade balance for the euro came out better than expected. Canada, member speaks. Right now, core retail sales came out less than expected. PPI, producer price index for the US, less than expected. Retail sales, less than expected, which was expected. Core producer price index came out less than expected, which is not good for the dollar. And we should see here within the next 30 minutes CB leading index month on month for the UK, and that will probably be better than expected. And then, of course, at 10 a.m. Eastern, we have preliminary consumer sentiment numbers, business inventories, inflation expectations, and then finally but not least, natural gas storages. So it should be a very interesting morning, quite a bit of news that will drive certain trades for the morning. So let's begin. Let's take a look at the futures real quickly. The Dow's been coming down pretty aggressively. As you can see, it took a tremendous beat down yesterday. It was not what anyone expected. Well, I expected it, but it's gotten worse. It came down another 100 points right now. So, had a good signal during Asia. This was about 6:15 my time, 9:15 p.m. Eastern time. You could have had a good entry here. You had a re-entry here, which was very good at 7,432. Right now it's at 7,360. So it has, it's about 80, 90 pips down. More likely will continue. It has been a little bit on the slow level coming down, but I don't think that it's going to go up any further today. So we don't have an entry here, unfortunately. Even if we were to look at the smaller time frames, it would be too much risk at this point. Let's take a look at the bonds. We like bonds. Bonds are good. Bonds, you had a good entry right before the European session opened. Here on the 15-minute was very clear. This is the candle that gave it to you. And normally when I tell you to, when power dots form, I tell you to go back 2, 3 candles. Well, in this case, all 3 of them here told you long, but this one especially, because this is a bearish wide bar. And you can see here how every time they went short, the buyer's point of control is here. So that has been an issue for the sellers. the buyers coming in to take control, which is exactly what they did. Now here, for instance, if we look at what the story tells us here, we have power dot formation here. They did spike up, so it's been done. Go back historically, and what do you see? You see two candles, actually four, beginning here. Right before they began their bearish run, the point of control for the buyers is up here on this bearish candle. So they announced, we're going to take control sooner than later and go long, which they did. As they came down, the point of control in each candle is always in the middle or a little bit higher, even here. Here was a little lower, but it did stop because they could not fulfill, and then they came down, and then they stopped it here. Now here, can't really say that they, once they started to go long, this was a little bit unpredictable, and this was a news event, but they did spike and go long. Now, as they went long, here they announced short, giving you a 2 candle warning. Whenever you see that on the first power dot, as soon as they go long, the point of control for the sellers is at the bottom of the candle, that means that this trade is short-lived and that they're going to turn around and flip it. And so exactly, they did give a 2 candle warning based on this one. One, which they did go short, spiked because of the news, gave a 2 candle warning, so they came up to the congestion level, and then of course came down. Now, this trade that is coming down is short-lived, not because of the power dots, but primarily because of what the buyers are announcing. So here the buyers are announcing that they are not in agreement to take this trade any lower, and they're going to come in eventually and stop the trade to the downside. So they're announcing it here, and they're announcing it in this current candle. Now this candle ain't over. It still has a few more minutes, but you can see that the point of control for this candle is in the middle. So based on this, I wouldn't really be going aggressively short because this is telling me I have a 2, maybe 3 candle warning. So I'm going to wait. I'm going to wait and see what happens. Now that the point of control has changed, that's different, but not quite, because this one is still announcing that they will eventually come in and take control. So I hate being late in the trade, and that's exactly what I am here. I'm late, but I don't think that it's going to go down maybe around here and hold. I don't think it's going to go down any further. They'll probably come back to the open, which is here, really. 152.27s. Not a grand morning for bonds, quite honestly. I think I would have expected more. I would have expected more, a bigger move than what they currently have, but it's just not there. So I wouldn't be taking too much risk, on this type of trade right now. The SPY for Australia, this one's pretty much over. This thing is just a brute. I mean, damn thing just gaps every time it opens, and the gap on this is just incredible. So if you don't get the signal here, don't trade the SPY, because the trade that you're going to get is short-lived. I mean, this went from 50.15 to 50.63, which is not a bad trade, but this is the one that I would have loved to get. And there have been times where I can catch the gap as they open, but not always. I have to really see it, and I didn't see it in this case. The S&P, we're looking at the same thing that we're looking at the Dow, pretty much. Nothing extravagant. Give it a minute. See here, they're announcing short. Now, it did go short here. I expect a 2 candle warning, which is, it started here, 1, 2, short. Didn't continue, but it ain't over. Now, it didn't continue because the buyers were not in agreement to allow this trade to go any lower. So now, based on this, and I actually like this because this actually shows the divergence to the upside. This is normally a trade that I would take long, but let's go to the small time frames just because we want to make sure. Yes, here as they came down, they announced long. They're still long. They're not short quite yet. And you can see here how this indicator isolates the price level that they prefer to buy and sell at in each candle. Now remember, you do have divergence here to the downside because this one spiked and they went down. However, here you have divergence from this point up. Why do I say that? Let us show the way. Because this is where they came down the most, and so the volume bars don't lie. Neither does the volume for that matter. And this is where you have to do a little bit of verification. Now, here the buyers have conceded to buy at a lower level. They're no longer here at the top. That makes this trade dangerous, and that makes this a continuation to the downside. But not yet. It ain't over till it's over. So, this one, as you can see, they threw everything at this. So when you look at the volume, it sort of gives you an idea, more or less, how it began. So this is basically where they stopped it. Look at the volume. You got, let's go with basic numbers. 2,292 on the buy, 3,255 on the sell, difference of 963 million on the negative is what you have there. That's a lot of volume they threw at that. And that's a lot of volume that did not get filled because that 963 actually represents the limit orders. Now here in this previous candle, same problem. They had more negative volume that didn't get filled, 665 million on the negative. You had 1,931 on the buy, 2,596 on the sell. So when you start to look at this, you start to see, number one, that they have a tremendous amount of high frequency trading in these three candles. Well, that tells you, because of the announcement, what they announced, that they were not going to go short any further and they were going to stop the trade, which is exactly what they did. Now, I don't like this trade to the downside. I really like this trade more to the upside. While everyone else is looking to the downside, I think right now they're setting up for a short, and we're probably going to see this retrace before they come down further. But I don't see a short trade right now, especially because we've got news coming up. But as I said, right now it's a little on the dangerous side to be getting in, just because they're in a congestion area, one, and number two, the trade isn't really defined. So we don't go after trades that are not defined. It just doesn't make sense. Let's take a look at the Russell. See, the Russell's the same way. It's disorganized right now. They did come down just like they did on the other. But look at what they did every time they came down. The buyers were announcing long. And they did. They went long. No question about it. It began here. You can see it here, here. You can see it here, and you can see it here. And then this is the one that basically retraced back up. Now, just because it retraced back up doesn't mean that that's what they were going to do. Because here in this bullish candle, the sellers announced that they were not going to let the buyers take control and eventually bring it right back down. So you did have a two-candle warning. 1, 2, short. But they went short on this one. Now, here the buyers are announcing the same thing, but they're not doing anything about it. And the buyers have conceded to buy it at a lower price. That makes this trade to the upside dangerous. I'm still thinking short. I'm not thinking long. And why? Because I believe that they're going to set it up to continue to go short. But it's not set up yet. For all I know, they can come up here one more time. Now, there's nothing wrong with getting 1.5 points on this, or a point. I'm just not willing to take that type of risk. I think at this point, we want to take it slow. Very, very slow. Let's take a look at crude. Now crude's come down significantly. Now here they're announcing short. 2 candle warning. 1, 2. I say short here, and I think we're right on time. And you'll see why. Number 1, there's a power dot here, so they didn't break above to the upside. Number 2, you see how they came down here, and right before, and we'll take a look at the volume because I think this is where it does make sense to look at the volume. Look at this. This is going to be very, very interesting. Now you can see how it went short. And let me get the pointer because this crosshair is killing me. So here they announced short. Why? Because as soon as they went long, the point of control of the sellers was announced below the middle of the candle, saying we're not going to let you take it long too much, and we're eventually going to come back, giving you a 2 candle warning. Now look at the volume on this one. You got 2,960 on the buy, 3,041 on the sell, difference of 81 million. That did not get filled. This is a bullish candle with bearish volume. That's a big statement. Whenever you see a candle like this where they come in and they hold the price, that it is bullish with bearish volume, and the point of control is below the middle of the candle, know for a fact that they're going to give you a 2 candle warning, and then they're going to flip the trade. Now here, in this candle, you know, the sellers agreed to sell at a higher price, of course, you know, but they already gave warning here. So here, look at the volume here. Is it any higher than here? No, it's less volume. So here you have 2,782 on the buy, 1,081, 1,860 on the sell, difference of 966 in excess volume that did not get filled. I repeat, did not get filled. So what happens with that story? Well, those are limit orders that didn't get filled, so we have to see what happens next. Well, the volume decreases. So here, for instance, in this candle, you have 1,695 of buying volume, 1,633 of selling volume, difference of 62 positive volume. So that's 62 million in positive volume that did not get filled, but they decreased their high frequency order flow to the upside. And we had a 2 candle warning, and now of course, bam, they came down short. And now you can see how they have more bearish volume, but more importantly is that not only do they have twice as much bearish volume in this, is that the buyers have conceded to buy at a lower price in the candle. They have changed their point of control, which was up here to down here. So being that said and done, when you see this pattern, this is the pattern that we like to see. Now, you know, this trade also announced long. When this went, before this went long, we got a signal here giving a 2 candle warning, 1, 2. And this one really confirmed it. So you're looking for these little details, what I call an anomaly within the candle, because there's a discrepancy, a difference between the buyers and the sellers in the candle. They are not in agreement. And when they are not in agreement, someone's going to take control. Now, even though they take control, doesn't mean you have to wait and see, because see, if this one was really going to be bullish, you would have seen the point of control up here instead of down here. And we would have seen bullish volume, not bearish volume. So the fact that we saw bearish volume, you know, pretty much tells you, look for a 2 candle warning. 1, 2, down. And so now I think they're going to continue to go down even further. Now, this is a sign, you know, when oil starts to go down in price, and I'm, you know, and I was speaking to a client yesterday, I think oil is going to come down to $38, $35 a barrel. I think they're going to take a beat down like if there was no other. It's a serious, serious trade to the downside. However, I think that we're late in getting into a position trade. I think that the only thing that we can do is just pretty much find a, I don't even call it a scalp, because I'm not scalping for 5, 10 ticks. You know, I'm scalping for, I'm trying to find a trade for 20 to 30 ticks. Well, I just hit my 19 tick mark right now. And I'm pretty sure, and see how the point of control just changed and came down even further? That means that they got one more candle to the downside. And until I see in a candle that the point of control of the buyers is either in the middle or up here, which I have not seen yet, that tells me that this trade still has room to go down another candle. Now, after a third candle, that's when I start to look and I start to say, okay, what type of play are these guys going to do? Because quite honestly, it just isn't there yet. But right now, I know that I've got a short trade to the downside, no question about it, and I just have to hold at this point because they're going to give a little bit more, and I want to take a little bit more. And would I be happy with 17 ticks? Yes. Why is that? I want you to think about it. If you learn to identify these trades, now I'm showing you in a smaller time frame. Imagine finding the same pattern of notification in the higher time frames that gives you one outrageous trade. And that is what, now in the higher time frames, you only get a one, sometimes two candle warning, most of the time just one candle warning. But when you see this anomaly right here, this discrepancy in the higher time frames, there's not even a question of whether that is a trade. It's a reality waiting to manifest itself. The question is whether you're ready to receive that reality. Because one thing is to dream about the trade, another one is to live the trade. I don't want you to dream about it anymore. I want you to live it. And that's why I'm showing you this. Because I think that practice, remember, is the mother of skill. The more you see it, the more you get comfortable with it. But you gotta know what you're looking for. That's the difference. If you can understand what you are looking for, then at that point, you develop the skill for it. So I'm trying to show you what you need to look for so that you become skilled at it. And so instead of me guiding you, you're going to be guiding me. I have clients that text me, email me, Skype me, call me in the middle of the night out of all miserable things, and I tell them I'm sleeping. We've talked about this. But it's okay. Why? Because they're happy to tell me, to report to me how their progress is coming along and how they have made so many pips or so many ticks. Well, they're finally seeing what I'm showing you here. So what is stopping you from learning and doing the same thing? The answer is time and dedication. And, of course, getting the software. You can't do anything without the software now, can you? But for those of you that have the software, all you have to do is just go back and look at it. Sell, don't be greedy. Buy short. Well, like I said, I still think that we have another candle to the downside. This ain't over. And you see how the buyers have conceded to buying at a lower level? I mean, look at the volume on this thing. This one says it all. 670 on the buy, 1,059 on the sell, difference of 389 on the sell, but they took this thing down. Now, that 389 were orders that didn't get filled. This one, look at how they increased the volume and they just hit someone. I mean, it was like a train wreck, basically saying, I'm going to take your money. Get ready. Well, in this case, I'm taking their money. So they need to be ready. 2,049 on the buy, 2,610 on the sell, difference of 561 negative. They're still, they're offering and they're taking this lower and lower, and the buyers are conceding to this. They're accepting this. Look at that. We are up 36 ticks on this thing. We've gone from 41.53 to 41.15. 40 ticks on this thing. I mean, if someone isn't upset right now, you should be. You should be upset if you didn't take this trade. Because this is a phenomenal trade. On a Friday morning, we're basically taking, let's see how many, 53 minus 13. That's a 40-cent hit that they're taking. Well, in this case, more. 42 cents, 43 cents, and going. And this is the gift that keeps on giving. See, Christmas came early, ladies and gentlemen. You just have to want it. That's the only thing. You got to want it. If you don't want it, I can't help you. I can't. Because there's a saying, you can take the horse to the water, but you can't make it drink. Now, you're not a horse. You know, human beings have one thing all in common. They can desire change and actually create it in their life. Why? Because we have the ability to change. We have the ability to evolve. We have the ability to change, to think. Our philosophy is not one-sided. We can take a negative and turn it into a positive. Now, you know, it's true, Edison, he made 1,000 mistakes before he got it right. I'm probably on the same track record, and so are you. It takes failure to succeed. You have to want to win, and in order to win, you're going to lose a little. You're going to fail a little, but that's okay because you're going to learn. So now, I don't, as much as I would love this to go down further, and I think that it probably has one more candle, one more, uno más, I'm going to wait for them to come down just a little bit more, and then I'm going to suck it, and then I'm going to take it. So I'm going to go down to the 3-minute now, because now I think it's time to cover it. Now here, they're announcing long. Look at that, deceitful little devils on the 3-minute. That's why I like to look at the higher time frames, but look, we're right back where we started, 40 ticks. Now, at this point, I really don't think that we need to prove anything more. I don't think it's going to go down any further. We can actually get out with 39 cents on this, and I don't feel bad in one trade. Now, imagine if you understood this pattern that we're looking at and we started looking at it on the 15-minute. So let's go back to it because I think it's important to go back to. We started looking at this here. This is what was our entry. I think we got in on the 5. Yeah, it was the 5. Yeah, right here. So we did see it. It was clear as snow. Clear as snow. The trade was a giveaway. It's a get out of the way. I'm going to take you. So, when it's a giveaway, then, you want to take it. Like I said, the holiday season is here early for you, for trading. It doesn't get better than this. We have, I consider, the most flawless system and strategy out there because we cover 4 elements of volume. Volume price analysis, volume spread analysis, volume divergence, and order flow. All 4 elements under one strategy. And we've designed the algorithms to basically work around those 4 elements and give you what you're looking for, which in this case is time. Time is the element that we all seek when we trade. The ability to forecast a trade with precision, identifying the best entry, identifying the risk, the stop loss that you're going to take, which in this case would have been no more than 10 ticks, if that, and letting them announce when they're going to flip it. Now, I told you they're going to continue to go down a little further, and I think they will. We got out with 39 ticks, and I don't mind getting out with 39 ticks, but I think they got one more leg to the downside, but, I think that we've proven our point. So, but now that they've gone down, what do you think is going to happen to the indexes? They're going to come right back down. I mean, it's just not a good thing. Not a good thing at all for them. It's a bad thing. It's a very, very bad thing. So at this point, see, and we have a power dot. Oh my God. Which confirms long. No, well, here it confirms long. But they went short. Now, They did come down. Dun, 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 dun. They know something that we don't know right now. Someone came out to release news. Let's see. What news was there? No. UK just came out. Leading index. Let's see. Better than expected. Okay. Not bad. We have a half hour before we have consumer sentiment. So let's go back to this. Now here, they've set the floor. We know this now, and they're going to run it up. But we're late. I hate being late, so I can't take the trade, unfortunately. But did they announce? Yes, they did. Here. Here is where they announced. After they went short, here is where they announced. Giving you 2 candle warning. 1, 2. What did I say? Power dot. Go back to 1, 2. What did they announce? Exactly that. The buyers were not happy going down any further. They held it in the middle, and then boom, pop goes the weasel. But we're late in this trade, and I hate being late. And so unfortunately, I cannot take it. I have rules that I abide by, and that's one of them. Silver came down, but there's no trade here. I mean, it's here, but it's not quite there yet. And actually, this one, yeah, long. This thing's short. This says short. That's dangerous. When this says short and this says short, that means they can come down short a little further, which looks like they're going to play it short. See? 2 candle warning. This is the 1, 1, 2. This is a 5 minute, and I don't like the 5 minute that much on silver. Silver's an aggressive animal. Let's take a look at the currencies now. A lot of you like to see the currencies. So we found a nice trade. Now, this is a nice trade, and I'll tell you why. Because the US yen, see how it came down, but see how see the problem with this is that this thing just has not really been cooperative in moving a lot. It hasn't, let's be honest. Since the open, it's just been ranging in between 122.80 and 122.50. That's a 30 pip range. That's very tight. Now, they are bullish to the hill on this one, and I'm going to show you why. Here's where the divergence began, right here. Why? You'll see. But I don't like this trade because it's, like I said, it's short-lived. They're going to come back down, and it's going to be, and they're announcing it because as they came down, the buyers here, were saying they weren't happy. Well, they went long, correct? Well, the sellers here are saying, hey, I don't really care to go long with you any further, so I'm going to give you 2 candle warning. This is 1, and we're going to wait for 2. Now, if this candle settles with the point of control, which is the price that they control in the candle, where they like to sell or offer, well then, that says that they're going to slow the trade down and they're going to bring it right back down. So, if the point of control changes in between this candle right now, and they got 5 minutes, well then at that point we know that they're going to continue to go long. Now, this is a pretty aggressive, bullish candle. This is bearish, but this one's bullish. But even here they announced short, giving a 2 candle warning. 1, 2, short. Well, they're doing the same thing here again. Even though it's a smaller candle, even though they're going up a little higher, they're still announcing short because they have had a really hard time breaking above 122.80. So let's see if we're right. And let's just wait for it. We already have 1 trade under our belt this morning, so we can't complain about that. Let's see if we can. Let's see if this is the one that gives it away. And there's not a whole lot of action right now in the FX. The action's already taken place. But see, look, right back where they ended up at. But it ain't over. It ain't over. It's just the beginning. Let's go to a 5-minute now. What do we have here? Power dots. What are they announcing? Short. This is the candle that I was looking for. Now here it's a little bit more clear. Again, point of control at the very bottom. Let's look at the volume. Where's the data box? Show me the money. That's right. Show me the money. Well, I'm going to show it to you right now. Look at the volume here. 42 million on the buy, 35 million on the sell. So they came in and held it. Okay. Difference of 7.8 million on the buy. Now this one has 104 million on the buy, 54 on the sell. Difference of 50 million to the upside. That's excessive limit orders that did not get filled. So we're going to see right now what happens here. Because if this one holds, if the point of control maintains in the middle and you have power dots, guess what? They're going to flip, turn, and boom, come down. And so that's what we're going to wait for. We're going to wait for them to give us the trade. Are there any questions? This would be a moment. No questions, really? Now, maybe they're not going to give us 2 candle warning. And they're just going to go on. See, I don't like this, though, because the buyers are up here. Short-lived trade. I'm going to wait. I'm not convinced. They got 2 minutes left. And I think the next candle will be the one that I want. Not this one. You know, sometimes when you're bored, you gotta sing, you gotta hum, you gotta smile. Tell yourself a joke. There's always something funny out there. In this case, the funny thing is that they can't trick us anymore. We own them. And that's a beautiful thing. When you can say that with confidence, say that you own the trade, then you know that you become a trader. Now, you're going to have losses, minor losses, and you're going to have bigger wins. But if you're able to see what you need to see, in this case, we're looking for what we need to see, then you're not going to jump into a trade emotionally. Okay, let's see. We had quite a few questions, actually. Okay, so as positive volume means that there were not enough buyers to fill market or limit orders. Yes. Okay, now I like this short. Gave it 2 candle warning, but not yet. We're going to wait for it. Sometimes in FX, they can take up to 3 candles before they actually make the move. That's why I said I wasn't too keen on it, on this one. I think they got one more move to the upside before I'm convinced. Now, look at the volume here. The volume dropped significantly. 59 on the buy, 56 million on the sell. Really a difference of 3 million, which is nothing. This is a bearish candle with bullish volume. That's why I'm not jumping in on this quite yet. You know, I'm not fully sold on the concept that they're going to go short yet. I'm waiting for it. Now, if the point of control in this candle stays below, and let's say this goes up, then at that point I know that we've got a potential entry because they're going to flip it. But right now, they're not flipping anything. Now, here we had volume divergence, but now the volume divergence is on the opposite side. And I will show you why. Let's change the color. Let's go with the white. Yeah, we need a color that stands out like a sore thumb. Now, there's the short. Here we go. So we got it at 122.73. What would be my stop loss here? No more. Let me get the crosshairs now. I'd say 122.80 is what the max I'm willing to give up at this point. I don't think I would give up more. Why? Because it's right below the power dots. 122.81 max. Now, since they've taken their time here, and they've pretty much maintained a specific range, I can live with this trade and say, okay, this does have the potential to come down because it wasn't aggressive to the upside. And so, even though they've been challenging this level quite some time, they've taken their time in challenging it. So I feel comfortable taking this trade because this is telling me that 122.81 is a price level that they are rebalancing their order book around. So I just have to wait and see. What I would have preferred if we would have been able to get an entry at around 122.80, but sometimes beggars can't be choosers, and you just gotta wait for it. Question. Next week. Yep, Monday's good. Monday and Tuesday are good, Richard. We can definitely do it. So now it's a matter of just waiting. Patience is a virtue. Now, if they go below our entry, they're done. I mean, it's going to be just nasty for them. Because I expect them to come right back down here to 122.51. So that would make it, close to a 20 pip trade, which would not be bad for the day. Especially on a Friday. You'd be going home with a smile on your face from cheek to cheek. Let's just say we'd call these cheeky little fellows. So let's see. Now, I haven't had a chance to finish the video that I was planning on doing for those of you that have the new indicator, which is this one here. The dash is the volume price identifier. I'm going to work on it over the weekend. I will get it out to you. And it will be, I'm trying to make it an hour long after the 6.5-hour webinar that I gave you. So I'm trying to compress everything into an hour so that you can see there's like 4 examples you need to be concentrating on when you trade. And I believe that will make the difference tremendously. So just bear with me. I will get it out to you guys early next week, maybe over the weekend. If I finish it between today and tomorrow, you'll probably have it over the weekend. I'll share it. I will send it to you. Boy, they're really just playing this. They're just making us wait. Now, if this thing starts to go down before the news comes out, that means that they know something, which is okay because I know something about them. Alright, let's see. Yes, I do. I do smoke cigars. Wow, that is awesome. You're going to be there? Oh, please get me a few. Get me a lot. Now that would be a birthday gift. A late one, but a good one. Okay, now we have something which is very good news. What is that? The buyer's point of control. The buyers have conceded, accepted to buy at a lower price level. They're done. Now the trade is ours. Can I get an amen? Oh, that'd be nice. Thank you, Richard. See, our relationship with God here is not, I'm in a bad trade. Oh, please, please, God, bring it back. I promise I will never trade that trade again. Please, please, just no. Our relationship with God is different because we thank Him for these trades that He gives us, because He's given us something that very few traders out there have: knowledge and wisdom. You can't get that on your own. That's God-given. So this ain't over, but they're gonna make us wait for it. They're really gonna make us wait for it. See, I'm looking for them. If they come down here to 122.66, you know, I'm more content because they're going to be playing around this pivot and these power outs here, which have been broken before. Now, that means that this level is not a real support level, and they can break right through it as well. And if they do, we have a tremendous trade. Like I said, it looks like it could become a 20 pip trade. So we'll post this video up today, and we'll email it out tomorrow, so that you guys can, study it over the weekend. I think it's a great example in order for you guys to get very comfortable with it. Boy, they're just waiting. It's a news thing. It really is. They're waiting for the news. They're waiting for consumer sentiment, business inventories, and inflation expectations. That's why they're doing this. Let's take a look at the daily. Oh yeah. Let's see. That's the thing about effects. Sometimes you just gotta wait for it. I mean, they'll move, and they should come down because the Dow's come down pretty significant. It's down 60 points right now, right after the open. I mean, look at this. It looked like it was going to go up. Remember, we saw that, and I said we were late, and I didn't like it. And they're right back down. So the fact that it's down tells me that this one, and the U.S. yen has been following it pretty religiously, more or less. So they've got a good correlation going. Now, when looking at this, the only problem that I have here is that they're using the trend dots as a support level to make a move to the upside. So we need this candle to trade below. If this candle goes below 122.72, I will feel more comfortable with it continuing to come down. That's the only thing. So if they set it up and trade below that right before the announcement, I think we're good. Let's see if they play it now. Three pips. Let's go. Let's go. Let's go. Come on, make it 10 before the announcement. Four pips. Five. Ooh, it's going to get interesting. Six. Keep going. 7. Can I have a hallelujah? Now, here's the kicker. Now we have the anomaly, the discrepancy between buyers and sellers. So we need the buyers to concede and come down. Once we have that, then we know that this is going to continue. We have 7, 8, 7. Come on. 6. It ain't over. It ain't over. There. The buyers have conceded to buy at a lower price level. That's it. They're done. So remember, the point of control can change in between the candle, and that's okay. We want it to change. Because when we see change is good, change without activity cannot happen. The same thing with your trading. If you don't change the way you trade, it's because you are not active about doing it. You have no activity. You do not practice. You do not study the charts. You need to dedicate at least, I always say, at least 1 hour a day. You know, I dedicate a half hour a day to walking every day. Why? Because I have to. I'm a diabetic, so I have to keep my blood down, my sugar down. And that's okay. I walk 2 miles. It takes me a half hour to walk 2 miles, and I'm done for the day. Don't have to do it anymore after that. It's a habit. How long is it taking me to form that habit? It's taken me about 60 days, to be quite honest with you. But now I have to go for a walk every day. Well, same thing with trading. You know, if you look at the market, you study it, but if you need the right tools to study it. Without the right tools, you can't make it. Because what we're giving you here is information on how they manipulate their order flow. And you're able to see it before anyone else actually gets it. So we have digitized the trade to a level that most retail traders could never imagine. So let's see. It ain't over. We still got 5 minutes before the announcement. Boy, they love playing this range, don't they? Right back to break even. Look at the point of control of the sellers in this candle. See how it's right here at the very bottom? Even though the buyers are trying to come in and control the trade, the sellers are saying, I'm not in agreement. I'll let you come in, but I'm going to take it away from you sooner than later. And I think they're waiting for the announcement. I think as soon as the numbers come up, that's when they're going to define the trade. But I think they pretty much defined it at this point. Three more minutes. Remember, the longer they form power dots, the better the trade for us, because it's taken them that long to rebalance their order book and get out of their long positions before taking it short. 2 minutes. Give it a minute, give it a minute. And this is their algorithms that are basically just trading right now. This is not manipulated by a trader. No. You're trading against the robots now. The robots are very structured and systematic. And we like that because we can take their structure and turn it around against them. We got 1 minute. So let's see what they're going to do. One minute. Okay. Let's see. Now remember, if they don't break above 122.81, they hit. Sellers have conceded. It ain't over yet. For all we know, they went up to retest before coming down. I would have expected a bigger move out the gate on this. Nope. It's over. Hold on, let's see, it ain't over. Oh yeah. Yep. It's over. That's okay. It is what it is. You can have, but let's see, I'm still thinking that it's just not. Let me look at the numbers first. I want to see what came out. Oh yeah, they came in. Well, consumer sentiment came in better than expected. Business inventories came in less than expected. Inflation came in less than expected. But it ain't over. Interesting. It ain't over. The buyers could change their point of control. This is where it could come right back down. But it's too much risk at this point to be speculating whether they're going to come back down. Now, you see here how the dash is right at the 50% line. If the volume would have come in more aggressively, then I would be, and the dash would be more at the top, I'd say, okay, this thing's going to continue to go up. But it's starting to come down, and if this thing settles below the 50% line, then we have the volume divergence that was already there, and that means that this is going to come all the way back down. And that means that we can actually add a position, which in this case, I'm tempted to do right about, not yet, it ain't over. Now, let's see, soon. Now, all right, let's see. Let's see if I'm right. See right here? See how it's a bullish candle with bearish volume. Watch. This one has negative volume. 50 million on the buy, 51 on the sell. What do we say normally? That the next candle will be that as well. This one has 146 on the buy, 157 on the sell, difference of 11 million. Now, bullish candle with bearish volume means that the next one should come down. So even though they're trading around this level right now, and again, the power outs are very significant because they do isolate the support and resistance levels very well for us. So at this point, even though this announced along here, 2 candle warning, 1, 2, I'm thinking the next one comes down. Let's see. Let's see if I'm right. All right, we're a break even. And you have a pivot, another power dot right here. Again, remember, the longer they take, the more transparent the trade is once it becomes directional. And look at what they did. They settled right below the 50% line. Let me remove that line. And let me move this one a little. See right there? That gave it away. Tricky and deceitful little devils, aren't they? And now the buyers have conceded to buy at a lower price level, and it's on. The minute it comes down here to 122.65 again, and it breaks below, we're good. See how the point of control for the buyers continues to go down? That is a good sign. Now remember, this was a bullish candle with bearish volume, and so was this one. 2 of them can't be wrong. So these are small little details that you need to pay attention to when you're trading. You always need to confirm. And once you have that confirmation, then you know, then you have the peace of mind that the trade is going to go, and then you can add more lots if you want. Bottom line is, if you know that the trade is going to go, why would you not do it? Unless, you want to become consistent. I always tell people you're going to trade with one lot, one contract. Get consistent. Once you become consistent at winning, and you will have more wins than you will have losses. Sometimes you'll get stopped out, and that's okay, because your stop loss will be very minimal, between 10 and 15 ticks, 10 and 15 pips, which is nothing. But your wins will be more than that. They can be from 20 to 40 to 40 to 80 pips or ticks. See, look at the Dow is down 120 points. No way is this going to hold to the upside. It's got to come down, but it's not going to do a lot. I'm expecting that based on that move and based on what they did here, this thing should come down to 122.50. Problem is that most of the money right now is in the futures, not in the FX, but the banks still have to rebalance their positions, which is what we bank on. But this could be one of those trades that can just take its sweet time. Question. Oh yeah, the S&P, yeah. We'll take a look at that in a minute. Let's close that. See, I don't like when the point of control changes so drastic, and you have more bullish volume. See right here, 125 on the buy, 80 on the sell, jumps to 46 positive volume, 43. Ooh, okay, but we have a pivot. Okay, this is going to be interesting. Let's see how this candle plays. This is a bearish candle with bullish volume, and I hate those. So this thing has to come down pretty drastic in order to make me happy. Okay, point of control is to the downside. Let's give it a minute before we look at the S&P. Come on, come on, come on. Give it up, give it up, give it up. The sellers are offering at a lower price level. The buyers are conceding. But now we need them to really kick. I want them here at 122.65. That's where I want them. Because once they're there, the minute they go below 122.63, it's on. So I want them to test that level. Come on, just another 5 pips. Give it up. All right, we'll let you. Let's see. No, you're still going to go down. It ain't over. No, 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 it ain't over. Come on down. So we got more negative volume on this one than we have positive volume. Problem is that the buyers aren't buying at a lower price. That's the issue. So let's see. Give it a minute. Okay, here it comes. Come on, come on, come on, come on. Let's go. Give it up, give it up, give it up. Give it up so we can go see the S&P. I know you're coming down. No way you're going to hold it. All right, let's take a look at the S&P real quickly. Give it a minute. Wow, the Dow's down 129 points. Oh, it's just a sad day for Wall Street. Definitely no bonuses for the end of the year. Yes, let's see. Yes, you could, on the 5-minute, you could tell they were going to go short. This is a long candle, bearish point of control here, here. And they came down, and then two kind of warning. This is, they went up, came down, and then finally this one is the one that gave in. And so they went from 2037 to 2027. That's a 10-point drop. And it keeps on giving. Can we get in on this trade? No, we're late. Could you foresee it? Yes. I think not, Rich. I do not sound like, oh, please God, I will never do it again. That's a good one. No, you see, it didn't make sense why they did that play, because the Dow came down very aggressively, and normally this one will take its time, but it will play out. The numbers didn't make sense, especially because the Dow had already crashed. So that's why I was like, no, it doesn't make sense. It didn't add up. I've always said that if it doesn't add up, it cannot work. Can't happen. Just doesn't give. So some of you say, well, this was just a lucky trade. No, the crude trade was not a lucky trade. That was a legit trade. And this one as well. I think we've got a lot more to capture on this one, because now that the Dow is down 130 points, I'm not saying that this could become a 50 pip trade, but normally I've seen that happen. When that does happen and this one comes in late, you usually pick up 40 to 50 pips on this bad boy. I'm looking for 20, to be quite honest with you. Because if this comes down to 122.50, I'm happy with that. I can't complain. So let's see. Yeah, I think we got one more candle to the downside, and this may be the one that just gives it away. So let's go. Give it away. They break below that 122.63, it's on. No question about it. So now we are, yes, oh God, please give us more. Oh my goodness. It's just about to pop. Come on. Pop goes the weasel. Let's go. Give it up. Give it up. There it is. Oh my goodness. Come on. Keep going. Come on. Give it up. You know you want to. See, look, Dow went down 157 points. The S&P is down 18 points. NASDAQ 54. Ouch, that hurt. Just thinking of that hurts. My only problem with this is that this should have given up 20 pips by now, and it hasn't. They have been stubborn mules at going below that. I mean, we're at 8 pips right now. And it's holding right here. Let's get the crosshairs. See this pivot here? See this pivot here? That's exactly where it's trading. Right there. It just doesn't want to give it up. Now this could be a small retracement before it comes down. But I don't like the fact that they've come in with a lot more volume, more bullish volume than bearish volume. Now, being that said and done, coming in with a lot more bullish volume than bearish volume, this thing should have popped to the upside, and it hasn't. But now it's at a congestion level where it sort of makes you wonder, okay, are they really, really going to continue to go down? That's the type of call that at this time of the morning, it's very hard to say. Primarily because it is Friday, everyone's taking profit, and they usually just sometimes stop. They'll pull liquidity out of the market. It's amazing how recently they've been doing that. They have been just pulling liquidity out of the market, and the trades just don't move. I mean, they're just stuck at certain levels. So that has been an issue. Let's see if it continues. No, it's just not giving it up. It's a crying shame. See, this thing should have just tanked by now. That's what upsets me, is they just, and if you get out and then it happens, then you're even more frustrated, and you're like, why, oh why did I get out? Because they're right there, right there. They're at the edge. Now we're up 9 pips on this thing. I mean, we really don't have to prove anything else this morning. We made 39 ticks on crude, and with this, can't go wrong. Let's see how the volume comes in on this thing. And you can see it here at the bottom. I mean, they're just, it's more positive than negative volume, but let's see. This ain't over yet. Let's see. Come on. Give it up, give it up, give it up. Break the level. That 122.63 is a real doozy. If they do it, they got to do it here. Now we're up 10 pips. Come on. You can do it. We believe in you. Uh-oh. Discrepancy in the ranks. Come on, slap someone. No. Just ain't giving it. No, they just don't want to play. I mean, you got a little bit more positive volume than negative volume on this thing. Look. 32 on the buy, 29 on the sell, 30 on the sell. Difference of 2 million, which is nothing. 34 on the negative, 35 negative, 34 positive. I mean, it just doesn't want to budge. They're offsetting the trades evenly matched right now. That level 122.63 is just a bandit. They just won't give it up. No, it's over. I don't think that we're going to be able to get any more out of this. As much as I would like to, they just don't seem to cooperate with us. Yeah, it's over. It's over, as they say. Don't cry for me. I can't really complain. I mean, at the end of the day, did we come out positive in trades? We did. Bottom line is that we didn't miss a trade. We looked for the trades that made the most sense to us, and we took them. And sometimes, as a good friend of mine says, a trade is not a trade. That is also a reality. If you can't find a trade, don't trade. It has to fit a certain strategy, structure that you can believe in. And if it doesn't do it, then there's nothing more to really discuss. And in this case, I mean, you have more, look at this, you've got more negative volume on this than you do positive volume. But they're just not coming down. I mean, the bottom line is that they can throw in all the volume. And this is where, high frequency trading is something that people don't understand, because you have all this volume coming into the market and no price action behind it. And that's why the moving averages have become obsolete and lagging, because you can't rely on them. It's a problem. It's an issue. I mean, look at this. You got 71 on the buy, 81 million on the sell. I mean, that's a lot of volume. And this thing still doesn't move. Now, what they could do is actually come here, and as soon as this candle closes, then flip and come down, because they'll use the trend dots as a resistance level. And we've seen this happen time and time again. So, the pivot may be here, but I want to see what happens here. And if I'm right about this, this is the one where they're going to come down. So let's see. This is it. This is the last candle. If by this one they do not follow through to the downside, which they should from here, then we're done. Because when they initiate a trend, they'll usually use the trend dots as a resistance level for the trend to continue. But they haven't broken the trend stop here, so the trend is still bullish. It's not bearish, but I think that they're going to hit it very soon. It's just a matter of time. But they've been making us wait and wait and wait and wait and wait for it, that they just have not wanted to give it up. But I think they've got to give it up. No. Seems like they're not going to go down any further. Seems like it's over. Our relationship has been tarnished. So as much as I'd love to stay, can't. Time to go. Come on, just give it up already. This is where I hate their algorithms, because they love to make you just wait and sweat once you're in a trade, and then they give it up after you get out. No, that's it. It's over. So it has not been a bad morning. At the end of the day, we've come out with 2 positive trades. Can't complain. The first one was the one that really gave it up, which was crude. Gotta love that trade. That was a phenomenal trade. But everything else, the US yen just didn't play. Could you foretell the trade on the S&P when we looked at it? Yes. Yeah, you could see it. It was there. Any questions? No questions? Really? Wow. I am in shock. Surprised. Let's take a look at silver real quickly, because that one we saw that it had the potential to come down, and it didn't really do much. Let's take a look at the euro real quickly. And that'll be the end of that. See, I wouldn't take this trade short. It did announce it here. 2 candle warning, short. I'd say trade it at your own risk. I'm just not interested in taking it any further. So if there's no more questions, I'm going to put in the chat my email. For those of you that have questions, you can email me. Ricardo at Phoenix Trading Strategies.com. You can call me. My number is 818-431-1357. For those of you that are brave enough. And you can Skype me. And that's all she wrote, ladies and gentlemen. I want to thank you very much for joining us today here at Phoenix Trading Strategies. It has been a pleasure trading this day along with you. I think we've looked at some great examples. Yes, we'll definitely decide Monday morning what time we should get together to begin your training, Rich. So that's pretty much it for the day, ladies and gentlemen. Have a great weekend. I look forward to seeing you Monday morning. Again, we will be here at 9 a.m. Eastern. Thank you. Good luck. See you then. Talk to you soon.